To keep yourself updated, subscribe to Indigolearn and click the bell icon and download our app OneFin to start learning on the go.
Hello dear students, today we are going to be doing chapter 2 of the Companies Act, which is incorporation of the company and the matters incidental thereto. Now in this chapter we are going to be covering section number 3 onwards to section number 22. We are going to be covering all the provisions in these sections. Along with that, wherever the relevant rules are applicable, we are going to be seeing them as well, right? So this is a quick revision. Let's start off. So first of all, what is the meaning of incorporation of the company? When we say incorporation, it means registration of the company. Whenever a new company has to be created, the details of the company have to be submitted with the government. Okay, that is called registration of the company or incorporation of the company. Once the company is incorporated, it becomes a legal entity. Okay, so we are going to study in detail the process of incorporation in your section number 7 in a while. Okay, let's move on. The next concept is promoter. Who is a promoter? Okay, the definition of the word promoter is covered in section 2 clause 69. Okay, but before we go into this definition, what exactly is a promoter? Promoter is someone who creates the company. Okay, so who does the registration, who has the idea about the company and the operations of the company. So in a way we can say that he is a founder of the company. So in layman terms, that is what is the meaning of the word promoter. But in the Companies Act, it has been specifically defined. So let's also see the definition of this word promoter in the definition which is given in section 2 clause 69. This definition says that promoter means any person who is named as a promoter in the annual return or the prospectus of the company. That is the first part. Okay, so if suppose the company has named a person as a promoter, okay, in the prospectus of the company or the annual return of the company, then for the purpose of the Companies Act, we are going to consider that person as the promoter of the company. The second part of this definition says any person who controls the affairs of the company directly or indirectly. Okay, and the third part says whose advice, directions and instructions the board of directors take or they are accustomed to take. Okay, so if anybody has directly, indirectly any control over the affairs of the company or who's advising the board of directors, that person is going to be termed as the promoter. So this definition is very, very broad. Okay, so broadly speaking, in layman terms, we understand that the founder of the company is the promoter. Okay, however, it may be possible that even though the founder is someone else, but the company names someone else as the promoter. Okay, so this is a very broad definition. Now, the important part of this definition is that any person who is acting in professional capacity shall not be considered as a promoter. Let's try to understand this with an example. Now we know that the definition of the word promoter says that any person who gives advice, directions, and instructions to the board of directors and the board of directors are accustomed to act based on that advice, that person will be termed as a promoter. Okay, so let's say we have a company. Okay, the company has some board of directors. Okay, now for tax matters on a regular basis, these board of directors, they consult a chartered accountant. Okay, now here the chartered accountants regularly give some sort of consultancy with respect to taxation matters to the company. Okay, can we say that this chartered accountant is the promoter of the company? The answer is no. Okay, so if suppose anybody is acting in professional capacity in exchange of a fees, okay, and they're probably satisfying any of these criteria, then they will not be termed as promoters. Okay, so here the CA will not be the promoter of the company. Let's move on and talk about the formation of the company. So we are going to first do section number 3. Section number 3 talks about 3 types of companies. Companies can be either public company, private company, or a one-person company. Okay, now what is the minimum number of members that should be there in these companies? When we talk about a public company, then a minimum number of 7 members should be present in that company. In case of private companies, it should be at least 2 members should be there, and in case of one-person company, at least 1 member has to be there, right? They should be subscribing their name in the memorandum. So for every company, we have this document called Memorandum of Association, which is created. Okay, this memorandum has a subscription clause in which the initial members of the company, they sign their names along with their details, right? So in case of public company, minimum of 7 subscribers should be there. In case of private company, minimum 2 members should be there. In case of one-person company, 1 member has to be there. Let's move on. Let's discuss the type of the companies based on liability. Okay, now the companies can be divided into 3 types. They can be limited by shares, they can be limited by guarantee, or they can be unlimited companies also. Now what do they exactly mean? A company limited by shares means that the liability of the members is limited to the amount that is unpaid on the shares. So when we say a company is limited by shares, first of all, this company has share capital. Okay, so that means the total capital of this company is divided into units, and each of these units is termed as shares, right? So if a member has taken some of the shares of this company, then the liability of this member is going to be limited to the unpaid amount on these shares. Okay, what does this mean? It means, let's say I am the member of a company. I have taken, let's say, 100 shares of that company. Okay, and these 100 shares are of 10 rupees each. So what is the maximum liability that I can have towards the company? It is going to be 100 shares into 10, which is 1000 rupees. So that is going to be my maximum liability, right? Let's say I have paid 8 rupees on each of these shares. Okay, so how much more can the company ask from me? They can ask from me the unpaid amount on these shares, which is 2 rupees on these 100 shares. That means more after what I have already paid, 200 more rupees can be asked from the side of the company. That is a company which is limited by shares. Next up, we have a company limited by guarantee. What is that? It means a company wherein the liability of its members is limited to such amount as the member may respectively undertake to contribute at the event of winding up. So it means this company might have share capital, might not have share capital. Now this means that some of the members of the company, they will get it written in the memorandum that at the time of winding up, they will contribute up to a specific amount of money. Okay, so in a way they are taking a guarantee that if the company goes into winding up, they are going to contribute some amount of money. Okay, so that is called a company limited by guarantee. All right, now this amount which is guaranteed, okay, this can only and only be called at the time of winding up. So let's say I am one of the members who is given a guarantee in a company. Let's say I'm saying that I'm going to contribute 10 lakh rupees at the time of winding up of the company, right? Now, let's say the company has not wound up, but the company requires funds. Can they ask me to bring this 10 lakh rupees into the company? The answer is no. Okay, so if a member has given guarantee that at the time of winding up, they are going to contribute some money, it can only be called out at the time of winding up of the company, not before that. Let's move on. Next is an unlimited company. Unlimited company means in this, it may be an unlimited company with share capital or without, right? So in this case, some of the members, their liability is unlimited at the time of winding up. Okay, so if the company goes into winding up, then they can be asked to bring from their own houses as much amount as is left to repay the liability holders. Okay, so at the time of winding up, we know what happens. All the assets of the company, they are sold off, right? And all the proceeds of these assets are used to repay the liabilities. Okay, and after that, whatever amount is left, it is given to the preference shareholders and then to the equity shareholders, right? So let's say after all the amount which is recovered from the assets, some of the liabilities are settled off, some of the liabilities are still remaining. Let's say 20 crore rupees liabilities are still remaining. Okay, in that case, in case of an unlimited company, this leftover amount is going to be called from the members whose liability is unlimited. Okay, so in an unlimited company, some of the members will have unlimited liability at the time of winding up. So this amount which is falling short, these members will have to bring it from their own houses, right? So such company is called unlimited company. Let's move on. The next section we are seeing is section 3A, which talks about penalty if the minimum member criteria is not met. Okay, what is this section saying? We know that in case of a public company, minimum of 7 members have to be present at all times, right? In case of a private company, minimum of 2 members should be present. Now, what happens if this minimum criteria is not followed? If a public company has less than 7 members, or if a private company has less than 2 members, okay, in that case, section number 3A comes into the picture. Section 3A says that if the minimum member criteria is not satisfied by the company and the company carries on business for 6 months with such shorter number of members, in that case, every person who is the member of the company after 6 months and who knows about this fact, that person is going to be jointly and severally liable for any debt which is contracted during this period after the 6 months. Okay, and they can be severally sued. Okay, what does this mean? It means, let's say we have a company. Let's say it's a public company. Now, in a public company, we know at all times 7 members have to be present. Let's say one of the member leaves. The company has 7 members and one of them leaves. Now, the company has 6 members left. The company goes on carrying on the business. And now, after 6 months of carrying on business with less than 7 members, this section 3 is going to be applicable. It means now all of these 6 members, if they are aware that they are working below this minimum member criteria, then all of these 6 members, they will be liable for any debt which is contracted after 6 months. So after 6 months, any If the company takes up any new loans, then for those loans, the company will not be responsible. It will be these members that will be jointly and severally liable with respect to those debts. Let's move on. Next is section number 4. Section 4 talks about the Memorandum of Association. What is a Memorandum of Association? So it is a primary document of the company. Whenever a company is incorporated, a Memorandum of Association is created, an Article of Association is created. Now this Memorandum of Association, it is a primary document. Now it contains most basic details about this company. Okay, so what are the details which are stated in the Memorandum of Association? It has 6 clauses which are stated in it. These 6 clauses are the name clause, the object clause, the liability clause, the capital clause, the domicile or situation clause, and the subscription clause, right? So these 6 details are to be mentioned in the Memorandum of Association, right? Now, is there any prescribed form for the Memorandum of Association of the company? The answer is yes. In Schedule 1 of the Companies Act, we have prescribed forms for Memorandum of Association. So if it is a company which is limited by shares, then the prescribed form is table A. If it is a company which is limited by guarantee and it is not having any share capital, then prescribed form is table B. If it is a company limited by guarantee and having share capital, then table C is the prescribed form. If it is an unlimited company which is not having share capital, prescribed form is table D. If it is an unlimited company which is having share capital, prescribed form for memorandum is table E. Now let's talk about the individual clauses. Okay, so first let's talk about the name clause. Okay, what is a name clause? See, in the name clause in the memorandum, the name of the company will be stated, right? Now, if it is a private company, then after the name of the company, private limited is going to be stated. If it is a public company, then after the name of the company, limited is going to be stated. If it is a section 8 company, then neither limited, neither private limited is going to be stated. Something like foundation or institution is going to be stated, right? Now, with respect to name, whenever the company wants to go ahead and select a name for a company, then that name should be as per certain criteria. Okay, so if you're starting a company, I'm starting a company, we definitely want to think about the name of the company. Now, what kind of name can we keep for the company? With respect to that, the Companies Act has something to say. The Companies Act has laid down rule number 8, rule number 8A and rule number 8B of the Companies Incorporation Rules 2014, which talk about what kind of names can the company keep. Okay, now in rule number 8, we talk about the names which resemble too nearly to a name existing of an existing company. So if suppose there is a company already with a specific name, okay, then our new company's name should not be similar to that other existing company's name, right? Also, it should not be exactly identical. Okay, rule number 8A talks about undesirable names, and rule number 8B expressly says that if certain types of words are to be used in the name of the company, then central government approval is required. Okay, now here words like national or central or certain government organization names, they are stated here. Other words that cannot be used by the company in their own name without the approval of the central government, they include commission, authority, undertaking, national, union, central, federal, republic, president, and you can read the list here on the screen. Let's move on. Reservation of name. Whenever a company is created, the company needs a name. Okay, so now can we keep any kind of name? We have discussed that we can't just keep any kind of name. The name should not be identical, it should not be offensive, it should not be resembling any other company's name, it should not contain certain types of words, etc. Right? Now, apart from that, we also have to check. See, how are we going to know if the company's name is similar to any other company's name or it is identical to any other company's name? There are so many companies in the country, right? So we have to reserve a unique name. Okay, so for that, we'll have to go to MCS site and we'll have to use Spice Plus facility. We'll have to reserve a name, whether it is a new company or whether it is an existing company which wants to change its name. For both the things, we'll have to reserve a name. Reserve a name means we'll send certain proposals that this is the name we want, this is the name we want. Okay, now whichever is finalized by the registrar of companies, it is going to be reserved for the company for a certain period of time. Within those certain period of time, the company will have to file other documents, right, and finalize this name. Okay, so that is called reservation of name. Okay, so if it is a new company, then if it is reserving the name, once they have submitted the name through the Spice Plus facility, then it is going to be reserved for a period of 20 days. Within 20 days, the company will have to ensure that it submits all the documents relating to incorporation and the company is incorporated. Then the name is going to be final. If within 20 days the company does not submit all the documents, then this name is going to be released for anyone else to use. Okay, in case of an existing company, if the company wants to change the name, okay, then first they have to reserve it. It is going to be reserved for 60 days. Okay, within 60 days the company will have to file the special resolution, company will have to file all the other documents, complete all the requirements, right? And if it does so, then the name is going to be final. Otherwise, that reserved name is going to be released for anyone else to take up, right? Let's move on. Let's talk about cancellation of the name. Okay, let's say the company has furnished wrongful details and a name is reserved. Later on, the registrar of company finds out that the company has given false details. In that case, can the name be cancelled? The answer is yes. If the company has not yet been incorporated, then the reserved name can be cancelled out, and there is going to be a penalty also that will be applicable up to 1 lakh rupees. This penalty is going to be applicable on the person who has filed this application, right? Because so far the company is not yet incorporated. So in that case, whoever has filed this application, they'll be liable to pay 1 lakh rupees, up to 1 lakh rupees of penalty. Along with that, the reserved name is also going to be cancelled. Now, this is the situation when the company is not yet incorporated and the registrar of companies finds out that there is some wrongful detail that the company has submitted, some fraudulent details that the founders and the promoters of the company have submitted with respect to the company, right? Now, what happens if the company is already registered? That means the promoters, the founders, they sent some wrongful details to the registrar, they submitted a name, the registrar of companies has accepted all of those details, the company is incorporated, the company has a specific name. Later on, after the company is incorporated, later on the registrar of company finds out that some wrongful details were submitted. In that case, what is going to happen? See, in that case, the company may be asked to change the name. Okay, 3 months will be given to the company, and the company will have to pass ordinary resolution and change the name. This is one possibility that might happen. The second possibility is that the company's name might be struck off. The third possibility is that a petition may be filed for the winding up of the company. One of the three possibilities is going to happen. Okay, so once the company is incorporated, after that, if it is found out that the name was obtained by the company and the founders by submitting wrongful details, then either the name of the company will be asked to change in how much time? In 3 months by passing ordinary resolution. Usually, whenever the name has to be changed, a special resolution is required. But because this is a circumstance wherein the company has submitted wrongful details and quickly the name has to be changed, therefore, here ordinary resolution is sufficient to change the name of the company. Either that or the company's name will be struck off or the company will be wound up. Let's move on. So that was the name clause. The next is our object clause. What is the object clause? This is also one of the clause in the Memorandum of Association. Okay, it contains the purpose for which the company is incorporated. That means what is going to be the business and operation of the company. Okay, so now it could contain the current business operations also. It could contain any future business operations that the company wants to take up also. Okay, so the company cannot do anything except what is stated in the object clause of the Memorandum of Association. Next is liability clause. We have discussed the different types of companies based on liability, right? So what is the type of liability of the members of the company? That is going to be stated here. Okay, so whether the company's liability is limited to shares or guarantee, or whether it is an unlimited company, etc., that is going to be stated here. Next is capital clause. What is capital clause? Here the details of the capital of the company are going to be stated. Okay, so if it is a company which is limited by shares, then how much is the total share capital of the company? How is that share capital divided into shares? Which are the total number of, how much is the total number of shares? What is the valuation of the shares, right? Then how many number of shares are held by different subscribers to the Memorandum of Association? That is going to be stated here also. In case of a one-person company, the details of the nominee will also be stated here in the capital clause, right? Next up is our domicile or situation clause. So in the Memorandum of Association, do you think that the company's address should also be stated? Well, see, something about the address should be stated. So here in the situation clause or the domicile clause, we mention the state name where the registered office of the company is situated. What do I mean? Let's say the company has many offices. Okay, it might have many different offices, but the main office which is registered with the registrar of companies, the address which is submitted as the main office of the company with the registrar of companies, that is called the registered office. Let's say the company's registered office is in Mumbai. Okay, so in that case, in the situation clause, what is going to be stated? In that case, the state in which the registered office of the company is situated, that is going to be stated. So in that case, we are going to write Maharashtra in the situation clause, right? Let's move on. Next is our subscription clause. What is subscription clause? See here, the signatures of all the subscribers to the memorandum is stated. We know that in case of a public company, minimum 7 members have to be there. In case of private company, minimum 2 members have to be there. In case of one-person company, 1 person has to be the member of the company, right? In the subscription clause, the initial members of the company, they sign, okay, along with their own details. Okay, the subscription clause contains the details and the signatures of the subscribers to the memorandum, right? Let's move on. Let's now talk about the different doctrines that are applicable on the company. First, let's talk about the doctrine of ultravires. When we say ultravires, it means beyond power. This doctrine says that the company should not go beyond its own powers. If the company goes or does anything beyond its powers, then that act of the company is going to be void. Okay, now see, with respect to the company, we know that the company has to follow the Companies Act, right? Now let's say the company does not want to follow any of the sections of the Companies Act. It wants to do something else, right? Then those acts are going to be absolutely void and illegal. Okay, now we also know that the company has Memorandum of Association. It contains different clauses, as we have discussed. It contains the name clause, the object clause, the situation clause, liability clause, capital clause, and subscription clause, right? Now if the company wants to go beyond those clauses, if the object clause of the company says that the company is engaged in manufacturing of textile, but the company wants to manufacture fertilizers without changing the Memorandum of Association, okay, then in that case, is it void? Well, the answer is yes. Here, doctrine of ultravires is going to apply, and such an act of the company beyond its memorandum is going to be void. It cannot be ratified by the members. Now, what about the Article of Association? We know that the company has Article of Association. It contains a lot of rules and regulations which the company has to internally follow. What if the company does not follow the Article of Association? Well, that act is going to be voidable. That means if the company and the members, they later on ratify that act, then it is going to be valid. If it is not ratified, then such an act is going to be void. Okay. Again, if the directors of the company, they do something ultra vires to their powers, then again that is also voidable. The shareholders may later on ratify it. In that case, it is going to be valid. Otherwise, it is going to be void. So that is your doctrine of ultra vires. The next doctrine is the doctrine of constructive notice. Now, this doctrine is for the protection of the company. This doctrine says that if any outside party is dealing with the company, then they are supposed to have read the Article of Association and the memorandum. So whatever is stated in the Article of Association and memorandum, any outside parties dealing with the company, they are deemed to have knowledge of the articles and the memorandum. Okay, so they later on cannot put a blame on the company that the company did not inform them about those details, because those details are stated in the articles and the memorandum, and both of these documents are public documents, so outside parties should know about it, right? Let's take an example. So suppose we have a company. Now in the Article of Association of the company, it is stated that if the company wants to borrow any money, 2 directors should go and borrow the money. Okay, now this company, from the side of the company, let's say only 1 director goes to the bank to obtain a loan. Now this bank gives the loan to that 1 director on behalf of the company. Okay, now later on the company fails to make the repayment of that loan. Later on, the bank told the company to make the payment of this loan. However, the company refused to make the payment. In this case, see, it was finally decided, this is a particular case study wherein it was finally decided that it was the bank's fault. The bank should not have given the loan to the company, because it was stated in the Article of Association that the loan is only allowed when 2 directors go to obtain the loan, whereas the bank gave the loan only when 1 director came, right? So here it was assumed that the bank had the knowledge of the articles and memorandum. So here the bank cannot say that I did not know. We did not know about the articles and the memorandum. We did not know that the article stated that 2 directors are going to come from the side of the company to get the loan. Okay, so this loan was wrongfully sanctioned from the side of the bank. Next up, we have the doctrine of indoor management. Now this doctrine says that if any outside party is dealing with the company, then the internal matters of the company is not the responsibility of the outside party. So he can easily assume that the company must have followed its own internal procedures, right? So this particular doctrine is for the protection of the outside parties that are dealing with the company. As long as the bank has followed the normal procedures, the bank is not at fault. So here, internally, if the board resolution is not passed by the company, then it is the fault of the company, not the bank. Now, this doctrine of indoor management does not apply in certain cases. What are these cases? The exceptions to doctrine of indoor management. First of all, knowledge of irregularity. Okay, so this means if suppose the outside party has knowledge that there is some sort of irregularity, and still the outside party, it lends the money or it enters into transaction with the company, then later on that outside party, they cannot claim the benefit of doctrine of indoor management. So here, if the bank is aware by any chance that the company has not passed the board resolution and still they go ahead and give the loan, then in that case bank cannot claim the benefit of indoor management. The bank will be at fault. The next point is negligence. If any outside party is negligent, okay, they're not careful enough, in that case again it will be the outside party's fault. They cannot take the benefit of indoor management. And lastly, forgery. Okay, so in case any of the transaction between the company and any outside party is forged, so that means someone else only has signed, authorized person has not signed on the documents, then that document is going to be completely nullified. It will not be valid. It will not operate between the company and the outside party. So the outside party cannot take the benefit of this particular doctrine. Let's continue. The next is section number 6. Act to override the memorandum, articles, etc. Now this section says that, see, we know that the company is going to make the Memorandum of Association, Article of Association, the company is going to pass certain resolutions, the company is going to enter into agreements and contracts with many parties, right? Now, in those agreements, contracts, articles, memorandum, in the resolutions that the company is going to pass, can the company write anything which is not as per the Companies Act? The answer is no. Okay, so the Companies Act overrides. It is superior to the memorandum, article, resolutions, agreements, that are passed on by the company, right? So all the documents that are executed by the company, memorandum, article, they should be as per the Companies Act. Otherwise, they will not prevail. The Companies Act is going to prevail if there is any contradiction between the Companies Act as well as the memorandum or the articles of the company, right? The next section is section number 10 that we are discussing, effects of registration. So this is relevant after the company has been registered. So once the company is incorporated, we are going to discuss that in section number 7 after this section. Once the company is incorporated, then what is the effect of incorporation on the memorandum and articles of the company? So this section says that once the company is registered, then the memorandum and article is going to bind the company as well as the members. So that means members will have to follow the articles and memorandum. Company will also have to follow the article and memorandum. They cannot override it. The next thing stated in this section is that all the monies which are payable by the members to the company under the memorandum or the articles shall be debt due from him to the company. Okay, so that means whatever money the subscribers have paid for the shares that they have subscribed to, okay, it is going to become the duty of the company to eventually repay back that money to these subscribers. So basically that money is going to become a debt for the company. The next section we are seeing is section number 7, which talks about incorporation of the company. So what is the procedure to register a company? That we are going to discuss in section 7. So what all documents have to be submitted when the company wants to register? When the company has to be registered. Okay, so first of all, a memorandum will have to be prepared, an article will have to be prepared, and they will have to be submitted. We know the prescribed form for the memorandum and article are stated in schedule 1. Next thing is that the declaration has to be filed that all the requirements of the acts and rules have been properly complied with. Okay, now this declaration, 2 different declarations will have to be created here. The first one has to be signed by the advocate, CA, CS, or cost accountant in practice who is engaged in the formation of the company. And another person who is going to sign on these declaration is the person who is named in the article as the director, manager, or the secretary of the company, right? So this declaration has to be filed. What is next? There is one more declaration that has to be filed. This declaration has to be filed by the first directors of the company and the subscribers. They will have to state in this declaration that they are not convicted of any offense in connection with the promotion, formation, or management of the company. So that means while formation of the company or any of the previous companies, they are not convicted of any offense. Along with that, they will also have to state that they have not been found guilty of any fraud or misfeasance during the last 5 years. Okay, so that is the second part of this declaration. It will also have to be stated. The next thing to be stated in this declaration is that all the documents that are filed with the registrar, they contain the information which is correct, true, and complete in all respects, right? So all these details will have to be stated, and who will have to give this declaration? The first directors of the company and the subscribers of the company. They will have to sign on this declaration, and this has to be submitted to the registrar of companies. The next detail that has to be submitted is the address of correspondence of the registered office. So if the company already has the registered office, then that address, or if the company is going to have the registered office very soon after the incorporation, then that address has to be submitted. Along with that, the particulars of all the subscribers to the memorandum, that will have to be stated. So what is their name, their residential address, their nationality, their PAN, their proof of identity, all of those details will have to be stated. So we know in the memorandum, a lot of subscribers, they sign, right? So whether these subscribers are valid people, they are correct people, they are not fake identities, that will have to be proved. So accordingly, all these details of the subscribers will have to be stated. Along with that, the particulars of the persons that are mentioned in the articles as the first directors will also have to be stated. So the details of the first directors, that means their name, their DIN, their residential address, nationality, PAN, etc. will have to be submitted to the registrar. Along with that, if suppose the first directors have any interest in any firms or body corporates, then those details will also have to be submitted. So if the first directors of the company, they have specific interest in any other body corporates or firms, that details has to be submitted. So these are all the documents and the details that have to be submitted to register a company, right? Along with that, we will also have to reserve the name of the company. So we have already discussed that run facility will have to be used. Okay, for a new company, whenever their name has to be registered, then 20-day period is allowed. Okay, in 20 days, the company will have to file all the incorporation documents. Okay, if they file it in 20 days, then accordingly the name is going to be reserved for the company. Okay, name is going to be finalized for the company. Otherwise, that name can be released for anybody else to take also. Okay, so with respect to that, extension is also allowed, but details of the extension are not in our course, so we are going to skip that for now, right? The next thing is all these documents relating to incorporation, they will have to be maintained at the registered office of the company permanently, right? Now what happens if the company submits any false details relating to incorporation? Is there any penalty? What is going to be the repercussion? So if any false details, incorrect details are submitted at the time of incorporation, then all those people engaged are going to be subject to section number 447 relating to fraud. Okay, so any directors, any officers, all those people will be subject to section 447. Along with that, the tribunal also has some powers. Okay, so if any application is made to the tribunal stating that the company is created because of fraud information, then the tribunal can ask the company to change the memorandum of the company or the article of the company. The tribunal also has the power to make the liability of the members as unlimited. The company's name can also be removed from the register of companies. The company can be wound off. The company can be given other suitable orders also. Okay, so tribunal here we are talking about NCLT, which is National Company Law Tribunal. If the National Company Law Tribunal gets an application that the company has submitted wrongful details at the time of incorporation, then the NCLT can ask the company to change the memorandum, articles, or the company's members' liabilities can be made unlimited, or the company's name may be removed, or the company may be wound up. Okay, now before doing any of these things, a reasonable opportunity is going to be given to the company to be heard. So basically, the company will be given a chance to explain themselves or rectify themselves, right? Next section we are discussing is section number 9, which talks about effects of registration. Once the company is registered, what is the effect of that registration? So after that, the company is going to be considered as a body corporate. So it is going to have separate legal entity of its own. Now, when we say separate legal entity, it means that this company can acquire, hold, or dispose of property on its own. So in the company's name, the company can purchase property, sell off property, company can enter into contracts, company can sue others, company can be sued, etc. Right? All the powers that are stated in the memorandum and articles can be exercised by this company. Let's move on to the next section, which is section number 10A, which talks about commencement of business. Now, this particular section is important from the perspective of your examination. Now, in this section, it is stated that from the date of commencement of the company's amendment ordinance 2019, if the company wants to commence the business, then they will have to fulfill two conditions. The first condition is that they have to file a declaration with the registrar of companies within 180-day period, stating that every subscriber to the memorandum has paid the value of the shares that they have agreed to purchase. Okay, so here the company's directors, they will have to file a declaration. In that declaration, they will all have to sign, and this declaration has to be filed within 180 days. In this declaration, they will basically write down that all the subscribers to the memorandum, all the initial members of the memorandum, they have paid for the number of shares that they had taken up. Okay, so this is the first condition. The second condition is that they will have to file a verification of the registered office with the registrar of companies. So wherever is going to be the registered office, they will have to submit proofs relating to the registered office of the company with the registrar of companies as per section 12. Okay, until and unless both of these conditions are satisfied, the company cannot commence business. If it commences business without satisfying any of these conditions, then in that case there is going to be some penalty. What is going to be the penalty? You can look at the screen. This is going to be the penalty for the company. The penalty is going to be 50,000 rupees. For officer in default, penalty is going to be 1,000 rupees for each day during which the default continues, up to a maximum of 1 lakh rupees. All right. Along with that, if such declaration is not filed within 180 days, then the registrar also has the power to initiate the process of removal of the company. Okay, so the company's name may also be struck off after giving reasonable opportunity to the company to explain if this declaration is not filed. Let's move on. The next section we are discussing is section number 21, which talks about authentication of the documents, proceeding, and the contract. Now, we know that the company is a legal entity. Now, the company must be entering into different sort of transactions with different outside parties, right? So whenever the company has to enter into any transactions with the outside parties, there must be some sort of agreement, some sort of contract, some sort of deeds, documents that must be executed between the company and the third party. Right now, who is going to sign on these deeds, documents, and contracts on behalf of the company? So with respect to that, we have section number 21. Section 21 talks about authentication of the different documents, proceedings, and contracts executed by the company. Now, this section says that from the side of the company, the documents and the contracts may be executed by the key managerial person of the company or any officer or employee which is duly authorized by the board of directors of the company. Okay, either the key managerial persons or any specific officer or employee which is authorized by the board of directors in certain matters, they can sign on these contracts. Now, what is a key managerial person? Let's quickly see the definition of the word key managerial person also. It is stated in section 2 clause 51 of the Companies Act. It says key managerial person means either the CEO of the company or the managing director or the manager or the company secretary or the whole-time director or the chief finance officer or any other officer not more than one level below the directors who is in whole-time employment designated as KMP by the board or any other officer as may be prescribed. So these are all the different key managerial persons. Let's repeat, either the chief executive officer or the managing director or the manager or the company secretary or the whole-time director or the chief finance officer or any other officer who is in whole-time employment of the company, not below one level below the directors, who is also designated as a key managerial person by the board or any other officer prescribed. These are the key managerial persons. They can sign on the documents on behalf of the company. Next up, we are seeing section number 22, which talks about execution of bill of exchanges and deeds on behalf of the company. Now, this section talks about any bill of exchanges, promissory note, other negotiable instruments that are created from the side of the company, who is going to authenticate them, and along with that, if any deeds, legal deeds have to be executed for the company, then who is going to execute and sign on those deeds. Okay, so first of all, let's talk about bill of exchange. If bill of exchange, promissory notes are executed, accepted, drawn, endorsed from the side of the company, then any person who is authorized by the board of directors, that person is going to sign on these instruments on behalf of the company to basically hold the company liable on these instruments. Now, what about the deeds? In case of deeds also, the board of directors are going to authorize an attorney to execute these deeds. Okay, so here in this case, an attorney is going to be hired. The person is going to be authorized to execute these deeds, right? Now, whenever this attorney is authorized, the board of directors are going to authorize such an attorney by either the common seal of the company. If the company does not have a common seal, then company secretary plus the director are going to sign on this authorization document. If the company does not have any company secretary, then two of the directors are going to sign to give power of attorney to this attorney to execute the deeds on behalf of the company. What are we saying? So in case of deeds, an attorney has to be made authorized. Okay, that attorney is going to execute all the deeds on behalf of the company. But how is the attorney going to be authorized? So in order to authorize that attorney, we have to execute a power of attorney. We have to execute a document to authorize the attorney to have the power to execute these deeds on behalf of the company. Okay, now in order to authorize the attorney someone will have to sign on that power of attorney. So who is going to sign? Either the common seal is going to be used, or else the CS and the director of the company are going to sign. If the company does not have a CS, then in that case 2 directors are going to sign to authorize this attorney to execute deeds on behalf of the company. Let's move on to section number 20. Recently, in past few attempts, questions are coming on section 20 also. This talks about service of documents. So whenever the company has to deliver or serve a document to any outside party, or if any outside party have to serve a document on the company, then what are the allowed modes of serving this document? That is stated in this section. Now, whenever the document is served to the company, then it can be served it has to be served at the registered office of the company. First of all, it has to be served either through registered post or speed post or courier, or leaving simply at the registered office, or by electronic modes, right? So if all of this is followed, if the document is served at the registered office and using any of these modes, then in that case it is going to be considered that the document is properly served on the company. Okay, now what if the company wants to serve the document to the registrar or the member? Okay, then in that case this document has to be addressed to the registrar or the member. It can be sent either by post, registered post, speed post, courier, leaving at the office of that person, or other electronic mode also. Okay, now here the question that came recently was that a person wanted a company to serve the notice specifically by a mode, which is courier. And this particular person, he also paid extra charges to the company to ensure that courier is done for the notice which are to be sent from the side of the company to the person, right? Now, if a specific person has told that the notice should be sent by a specific mode, and they have also given the fees or extra charges to the company, then it is the duty of the company to ensure that they deliver using that mode only and not any other mode. Okay, if the company fails to deliver with that mode, then the company is going to be at fault. Okay, so that means in section number 20, any specific member or person can also request the company to send the notice using a particular mode. As long as they are paying the fees, then the company's duty is there to deliver using that mode only. Let's move on. The next section is section 19 that we are discussing. It talks about subsidiary company not to hold shares of it, holding company. Now this is a very, very important section from the perspective of your examination. One of the most favorite sections on which the questions come on this chapter. Okay, now what does this section say? This section says that if there is a holding company and a subsidiary company, then the holding company cannot give, sell off, transfer any shares to the subsidiary company. Same way, the subsidiary company can also not acquire the shares of the holding company in any way, shape or form after this company has become the subsidiary of the holding company, right? Simple. Now there are 3 exceptions to this. The 3 exceptions are, let's say there's a holding company, there's a subsidiary company. Now, before they became holding subsidiary, it may be possible that the subsidiary company already has some shares of this company. And later on, it happens to be that the holding company acquires more than half of the shares of the subsidiary company. Basically, it makes the subsidiary company as a subsidiary company, right? So before this relationship of holding and subsidiary, if the subsidiary has any shares of the holding company, then it's okay. The subsidiary company can continue to hold those shares, but there is going to be no voting right allowed. In that case, if the holding company has any general meeting, then the subsidiary company will not get any voting rights. That is one exception when the subsidiary company can have shares of the holding company. Other 2 exceptions are if the subsidiary company obtains the shares of the holding company as a legal representative or as a trustee. Okay, in that case also the subsidiary can continue to hold the shares of the holding company, but will there be voting? The answer is yes. In this case, there is going to be voting allowed to the subsidiary company. So let's say there is a person. This person has the shares of the holding company, right? Now this person hands over these shares to the subsidiary company as a trustee. Okay, so in this case, we can see that the subsidiary company is merely acting as an agent. The subsidiary company does not have these shares in its own name, but the subsidiary company is merely acting as a trustee for this third party, right? In that case, the subsidiary company can continue to hold the shares of the holding company, and the voting rights will also be exercisable on those shares. Same way is the legal representative. If the subsidiary holds shares as legal representative also, they can continue to hold and voting rights will be allowed. The next section we are seeing is section number 16, which talks about rectification of the name of the company. Okay, now once the company is registered, okay, let's say the name of this company is very similar or identical to any other existing company's name, and let's say by mistake the registrar of companies has accepted this company's name. So basically now there will be two companies with very similar names. Okay, so in that case, later on after the incorporation of the company, can the name of the company be rectified? The answer is yes. Okay, now here we are not talking about voluntary rectification, here we are talking about mandatory rectification. So in this section there are two types of rectification. One, if the central government gets an application from any person and the central government genuinely thinks suo motu that the company's name is similar to any other company's name, okay, so then the central government may ask the company to rectify its name. The second option is where any registered trademark holder, they make an application. Okay, and based on their application, the central government asks the company to change its name. These are the two scenarios in this section. Okay, first let's talk about when the central government is of the opinion that the name of the company should be changed. In that case, the central government is going to send a notice to the company to change its name. 3 months are going to be allowed to the company, and the company can change the name by simply passing ordinary resolution. Okay, so this is the first case when the central government suo motu wants the company to change its name. Okay, the second part of this section talks about rectification based on an application by the registered proprietor of a trademark. If a trademark proprietor, okay, that means a person who has the name registered as a trademark in their name. Okay, so in that case, if such a person realizes that their company's name is similar to another company's name, okay, then they can send an application to the central government. Okay, but the most important thing here is that they can only send an application within 3 years of incorporation of that new company. Okay, so that new company that comes into existence, within 3 years, this person with a registered trademark, they can make an application to the central government stating that look, this company's name is very similar to our company's name, so please ask them to change their name. Okay, in that case, the central government is going to give a period of 3 months to that company. By passing ordinary resolution, this company should change their name to something else. Right now, once the company changes the name, then do you think the registrar of companies should be informed? The answer is yes. Within a period of 15 days, the registrar should be informed, and a new certificate of incorporation is going to be given to that company. The next section is section 12 that we are discussing, which talks about registered office of the company. Now, see, the company might have many different offices, but one of the office has to be the registered office. So that means the details of those office have to be submitted with the registrar of the companies, right? So that is going to be considered as the main office for communication purposes with respect to the company, right? So that office has to be a physical office. It should not be a PO box number, right? What is the need of a registered office? It is used for understanding the jurisdiction of the court or the jurisdiction of the registrar of companies. It is useful for communicating, and it is also useful to understand the nationality of the company, right? Now, once a company is incorporated, within 30 days, the company should have a registered office, and it should submit all the details relating to that registered office with the registrar of companies. Basically, the verification of that registered office should be done within 30 days from the date of incorporation. Now, apart from that, the company might be having so many different offices. Out of all of these different offices, the company must be putting some sort of label or some sort of banner. In these banners, the company will have to specify the details of the registered office of the company. Now, if the company has any seal, then the company has to put the name of the company on that seal. Okay, if the company is using any business letters, billheads, letter papers, etc., then the company has to write down its own name, registered office address, SIN, telephone number, website details, fax number, email, etc. on each of these documents that the company is using. The company should have its name printed on the different hundis, bill of exchanges, negotiable instruments that the company is using, right? Now, if suppose the company has changed its name in the last 2 years, then the previous name should also be stated on these banners outside the company. Now, if it is a one-person company, then under the company's name, the company will have to write one-person company in brackets. Now, can the registered office of the company be changed? The answer is yes, it can be changed. There are certain procedural requirements with respect to that. If the registered office of the company has to be changed in the same city, town, or village, then simply board resolution is required. Okay, so if the registered office of the company is in Jaipur, and in Jaipur only from one locality to another locality, the company wants to shift the registered office, merely board resolution is sufficient, and after that, the registrar of companies should be informed in 30 days. Right now, what happens if the registered office of the company has to be changed from one city to another city? So let's say from Jaipur, it has to be shifted to Udaipur. Okay, but it is in the same state. It is under the same registrar of companies. In that case, a special resolution has to be filed. Okay, so the general meeting will be held and special resolution has to be passed. Then the details of that will have to be sent to the registrar of companies in 30 days. Okay, now what happens if the registered office has to be shifted from one registrar of companies to another registrar of companies in the same state? Okay, so in Maharashtra and in Tamil Nadu, in the same state also more than one registrar of companies are there. So if the registered office of the company has to be shifted from one registrar of companies to another registrar of companies, first of all, special resolution is required. So general meeting will be held, special resolution will be passed. Apart from that, regional director's permission also has to be taken. So the company will have to make an application to the regional director. The regional director is going to take 30 days. Within 30 days, the regional director is going to send a confirmation that you can shift the office from this registrar of companies to this registrar of companies. Right now, after the confirmation is received from the company, from the side of the registered office to the company, then it is a duty of the company to file that with the registrar of companies in 60 days. So once the regional director gives the confirmation, within 60 days, the company should file it with the registrar of companies. Then finally, the registrar of companies, within the next 30 days, it is going to certify this change, right? And issue a certificate. Okay. Now, what happens if the company wants to shift its registered office from one state to another? Okay, so from Maharashtra, it wants to change the state to Kerala. Can that be done? The answer is yes. With respect to that, we will have to see what section number 13 has to say. But to brief you in short, section number 30 talks about changing the Memorandum of Association. It requires special resolution to be passed. Along with that, to change the situation clause, we have to also take central government permission. Now here the central government is also going to ask the details of the creditors. We have to also take the consent of all the different creditors and related parties. Once that consent is submitted with the central government is going to approve this shifting of the registered office from one state to another. Along with that, special resolution will also have to be passed in this case. Now, what if this section is not followed? In that case, we have all of these penalties. So you can pause the video and you can see these penalties. The next section we are seeing is section number 18, which talks about conversion of a company which is already registered. Right now, we know a company can be a private company or a public company, right? So if it is a private company, can it convert to a public company? If it's a public company, can it convert to private company? Or if it's an OPC, can it convert to any private company or public company? Well, the answer is in section number 18, which says that yes, companies can convert themselves from private to public or public to private, or one-person company to private, public, etc. Right? What is the requirement here? The requirement is that the company should redraft its memorandum. Wherever there are changes required in the memorandum and the articles of the company should make those changes. The company should file those changes with the registrar of companies. Accordingly, the registrar is going to see that all the requirements of the Companies Act are satisfied. If yes, then the registrar of companies is going to issue a fresh certificate of incorporation. Right now, let's say the company converts itself from a private company to a public company, or vice versa. Right, in that case, we know that private company must be having some sort of liabilities beforehand, right? So if the company converts itself from one type of company to another type of company, does this mean that the liability is going to continue? Does this mean that this new type of company will also be liable to any of the previous debts? The answer is yes. Okay, just because the company has converted itself does not mean that it is no longer liable to its creditors. Okay, so all the previous debts, all the previous liabilities, obligations, contracts, they will be as it is taken to the new type of company also. This is what section 18 says. Let's move on. The next section we're seeing is section 14. Section 14 talks about alteration of the article of association. We have discussed two main documents of the company are memorandum and article of association. If the company wants to change its article of association, special resolution is required. The company will have to hold a general meeting. In the general meeting, the company will have to pass a special resolution to change its article of association. Okay, now specifically, if the company wants to convert from a public company to a private company, and for that purpose the article of association have to be changed, in that case central government approval will also be required. Okay, so in case public company is converting to private company, the section number 14 says that central government approval will have to be taken. Okay, and then apart from that, the special resolution will also have to be passed to change the articles of the company. Right now, once the article of the company are changed, do you think that these new articles should be submitted to the registrar of companies? The answer is yes. Within 15 days from the changes, it should be submitted with the registrar of companies. Okay, and every single copy of the article of association should be accordingly altered. If this section is not followed, then we also have penalty. Company and every officer in default shall be liable to a penalty of 1000 rupees for every copy of article which is issued without any alteration. Let's move on. The next section we are seeing is section 13, which talks about alteration of the Memorandum of Association. This section simply says that a special resolution is to be passed if any of the clauses of the Memorandum of Association have to be changed. Okay, now we have discussed Memorandum of Association has the name clause, the object clause, the liability clause, the capital clause, the situation clause, the subscription clause. Right now, if any of the clauses have to be changed, then we need to pass this special resolution. Let's individually see each of these clauses. First, let's talk about the name clause. So let's take one clause at a time. First of all, let's talk about the name clause. Okay, in the Memorandum of Association, if the name clause has to be changed, then first of all, we need the special resolution, because whenever there is a change in the Memorandum of Association, we need a special resolution. Along with that, because the name is being changed, we need a new name. For that, central government approval is required, right? Because it is an existing company, it is going to apply for the run facility, which is reserve unique name facility. Then when the name is reserved, it is going to be reserved for 60 days. Within 60 days, the company will have to submit special resolution and other documents with the registrar of companies. Right, and accordingly, the name of the company is going to be changed. Now, sometimes it may be possible that a private company is converting to a public company, or the public company is converting to a private company. In that case, it may be possible that the main name of the company is not changed. Merely private limited is written behind the name, or maybe private word is removed from the name. See, behind the public company's name, limited is written, versus when we talk about private company, private limited is written behind the name, right? So if merely it is a change of the word private behind the company's name, but the actual name is not changed, in that case, central government approval is not required. Now, once the company changes the name, then the details will have to be submitted to the registrar of companies. The registrar of companies is then going to issue a fresh certificate of incorporation. Let's move on and let's talk about the situation clause or the domicile clause. Okay, now in the Memorandum of Association, in the domicile clause, we know that the state in which the registered office of the company is situated, that is stated. Now, what if the company shifts its registered office from one state to another? In that case, what is the procedure? First of all, special resolution is required because memorandum is going to be altered. Apart from that, do we need to take central government approval? The answer is yes. Here, central government approval will also be required. Now, central government is not going to just give the approval to shift the registered office from one state to another. There are additional requirements also. Here, the company will have to take the consent of all of its creditors, debenture holders, and other persons who are concerned with the company. Okay, along with that, the company will also have to ensure that with respect to all the company's debts and obligation, sufficient provision is made so that later on in the future, the company has enough funds to repay those debts and obligations. There is enough security against all of these loans, right? So this is compulsory requirement. Now, with all the details of these creditors, then application has to be sent to the central government. The central government is going to take 60 days. Within 60 days, the central government is going to approve this shift of registered office, right? Now, the special resolution that we have passed, along with that, the approval of the central government, both will have to be submitted to the registrar of companies. Okay, once the registrar receives all of this, then the registrar is also going to certify it. Okay, a fresh certificate of incorporation is going to be issued. Next, let's talk about the object clause. If the company wants to change the object clause in the memorandum, what is required? We need a special resolution, right? Now, apart from that, if suppose the company has issued a prospectus and the company has raised money from the public, okay, and if any of the money is unutilized, and if the company wants to change the object for which that money was brought out, that money was taken from the public, okay, then in that case, not just a special resolution will be required, but also the details of this resolution will have to be published in the newspaper, one English and the other one vernacular newspaper, in the place where the registered office is located. Along with that, the details will also have to be placed on the website right? And if any of the members who have purchased the shares of the company or other securities of the company, who have invested in the company thinking that the company is going to do certain objects, if they are disagreeing, if they don't want to be the shareholders of the company, then an exit option will also have to be given to those shareholders, right? So generally speaking, if the object clause is to be changed, simple special resolution is required. However, in case the company has raised money from the public by issue of prospectus and the company wants to change the object for which that money has to be utilized and that money is remaining unutilized, okay, in that case, along with special resolution, details will have to be published in the newspaper, 2 newspapers along with that website of the company, and dissenting shareholders will have to be given exit opportunity. Let's move on. We're talking about section number 15 now. Section 15 talks about alteration to be noted in every copy. Whenever a memorandum or article of association is altered, then every single copy of the company's memorandum and article, it will have to be altered. Otherwise, there is going to be a penalty. So if the company defaults, there is going to be penalty of 1000 rupees for every copy of the MOA or the AOA which does not contain the alteration. Next section we are seeing is section number 8, which talks about companies which are formed with charitable object. See, we have so far discussed private companies and public companies. Now, this section 8 companies are specifically not made to earn more profit. They are earned for certain charitable objects like to promote sports, education, research, social welfare, religion, charity, etc. Right? Now, their aim is not to create more and more profit, okay? But their aim is to promote some sort of charitable purpose, okay? So that is the reason why this section says that whenever such companies are created, they will have to apply all of its profit back into its objects. They cannot distribute any dividend. So in the examination, you might get a question that there is a section 8 company and the section 8 company wants to distribute dividend to its members. Can they do so? The answer is no. Section 8 company cannot distribute dividend to its shareholders. So that is a restriction which is stated in section number 8. Now, whenever somebody wants to create a section 8 company, then in order to do that, they will have to take central government approval. Okay, so a license will have to be taken. A permission is going to be sought from the central government. A license is going to be taken from the side of the central government. Now, these companies do not have the word limited or private limited stated after their name. Generally, the words that are stated are association, foundation, institute, something like that, right? Now, there are certain privileges that these Section 8 companies enjoy. Now, these companies are treated just like any other limited company. Now, in different sections, there are different privileges which are stated for Section number 8 companies, right? Now, for Section 8 companies, a firm can also be a member of the Section 8 company. Now, if the Section 8 company wants to change its Memorandum of Association or Article of Association, then they will have to take central government approval. For any other companies, if they want to change their memorandum or articles, they simply have to pass a special resolution. They don't have to take the permission of central government. But for Section 8 companies, they have to take the permission of central government also, right? If a Section 8 company wants to convert itself to any other type of company, again, special resolution has to be taken along with that central government approval. It is also to be taken. Now, in case of general meetings, for a normal company, a minimum of 21-day notice is required. Whereas for a Section 8 company, merely a clear 14-day notice is sufficient. Now let's talk about revocation of license. Let's say a Section 8 company does not follow the requirements of Section number 8. Section number 8 says that dividend should not be distributed, but this Section number 8 company distributes the dividend. So it does not follow Section number 8. When a Section number 8 company is created, we know that the company has to take a license from the central government. Now in the license, there are certain terms and conditions which are specified by the central government, which this Section 8 company has to follow. Now, what if the company does not follow the rules and regulations stated in the license? Okay, or what if the company is acting fraudulently or against public interest? In any of these situations, the central government has the power to revoke the license. Okay, the license of the Section 8 company can be cancelled. Now, what is going to be the effect of revocation? First of all, this company is going to convert from a Section 8 company to a normal public or private company. Apart from that, it may also be possible that central government initiates the process of winding up of the company. Okay, the company may be wound up. Or else what can happen is that the company may be amalgamated with another Section 8 company having similar objects. Okay, it may be merged with another Section 8 company having similar objects. It may also be possible that if the company is wound up and dissolved, then all the assets are going to be sold off, all the liabilities are going to be repaid. Okay, then whatever surplus is remaining, that surplus may be given to any Section 8 company, or it may be transferred to insolvency and bankruptcy fund. Right now, if any of the Section 8 company does not comply with the provisions of section number 8, then this is the penalty applicable. There are some amendments here, so please note. For the company, the fine is going to vary from 10 lakh rupees to 1 crore rupees. For director and every officer in default, the fine is going to be, or the penalty is going to be, from 25,000 rupees to 25 lakh rupees. In case of any fraud, section 447 is going to be attractive. Next section we are checking is section number 17, which talks about copies of the memorandum article to be given to the members. If any of the member of the company asks the company to send a copy of the memorandum or the articles or any other documents or resolutions under section 117, then it is a duty of the company to send these documents within 7 days of request on payment of any prescribed fees. Right, so this is a very simple section. If the members, they request the company to send these documents, company has to send these documents in 7 days of request. If there is any fees payable, then the fees will have to be paid from such a person. If this section is not followed, then there's going to be a penalty of 1,000 rupees for each day of default, subject to a maximum of 1 lakh rupees. Next up, we are seeing one person company, which is covered in section number 3. This is the most important section from the perspective of your examination. It has a lot of amendments which might be useful in your examination, right? So let's revise this. Now, in case of one person company, we know that only one member is there. Along with that, what if the member dies? In that case, the member also has to appoint a nominee. So for every one person company, there has to be a nominee also. In the event of death of the member, the nominee takes over the place of the member in that one person company. Now, whenever a nominee has to be appointed, a written consent of the nominee has to be filed with the registrar of companies, and the name of the nominee has to be stated in the Memorandum of Association. Okay, now let's say a nominee has become the nominee of the one person company. Later on, he wants to withdraw this consent. He no longer wants to be the nominee of a one person company. Then at any time, the nominee may withdraw the consent from being the nominee of the one person company. Similarly, if suppose the member does not want to keep the same person as the nominee, then he may also remove the name of the nominee. Someone else can also be put as the nominee. Okay, so it is ultimately the decision of the member to decide who is going to be the nominee of the company. The nominee can also withdraw the consent if he wants. Okay. Now, whenever a nominee is appointed or it is changed, the details should be filed with the registrar of companies. At the same time, these details should be also changed in the Memorandum of Association. Now, who can be a member or the nominee of a one person company? Now, here we have a lot of changes. This is the part which is amended. Okay, so earlier it was stated that a natural person who is an Indian citizen who should also be the resident, that person can be a member or a nominee of a one person company. Now this resident criteria has been removed. Now it is only required that the person has to be a natural person. That means he has to be a human being. So one person company can never be a section 8 company. So a one person company cannot be a section 8 company, but it can convert itself to a private company or a public company. Here also there is an amendment. Earlier there was a requirement of voluntary conversion or mandatory conversion. Okay, in case of voluntary conversion, it was stated previously that after 2 years a one person company can convert itself to private or public company. Now there is no such requirement. At any given point, the one person company can convert itself to a private company or a public company. Okay, another requirement previously was mandatory conversion. If the turnover of the company or the paid up share capital of the company was beyond a certain limit, then compulsorily that one person company had to convert itself to a private or public company. Now again, there is no such requirements, right? So now it is up to the one person company. They can decide whenever they want to convert into a private company or public company. They can continue to be a one person company also. So with that, we have completed our revision for chapter number 2 of the Companies Act. We have covered section number 3 onwards till section number 22. If you have any more doubts, please write them down in the comment section below, or you can also post them on the forum on the OneFin app. Right now, I'm going to see you again in another one of our revision lectures. So meanwhile, all the very best for your examination.